Hello, welcome to this video introduction to lease accounts. This is an add-in for Excel which you can use to calculate journal entries and disclosures for lease accounting under IFRS 16, FRS 102 and ASC 842. I'm just going to dive straight into an example to help you get used to the template and how it works alongside the add-in. So on the website here, leaseaccounts.com, I'm going to go to Get Started, and then here I can see the Download Template button. When we click that, this gives us the template to use in Excel. Let's enable editing. So this is what the template looks like, but we do need to make sure that we have the add-in installed as well. So I can see it here on my ribbon under Home. So this is what the add-in looks like. It's a task pane that sits on the right of your Excel window. In order to install it, you under Home and Add-ins, if you haven't previously installed it, you have to go into here and under More Add-ins, and then under Store, you can search for lease accounts. Okay, so first of all, we have this tab called Settings and Output Table. So settings is everything in this block of cells, and the output table is where the calculation engine will drop in all of your numbers, which is going to include the present value of the lease being capitalized, the right of use asset, and all the depreciation, everything associated with the lease. Let's start to fill out our settings. So you will have to make sure that you've entered some appropriate asset classes and subsidiaries. These are just entered already. You can see that we enter a currency for the subsidiary, but note that when you run this, it will only use one currency. So if you do have a business that has multiple currencies in different subsidiaries, then I would suggest having one workbook per currency. Okay, so let's select. We'll just use one subsidiary in this example. But if you did have multiple subsidiaries, then you can do consolidate other lessees, which means it will group them all together for your journals. Period start date, I'm just going to select a long period here. Sorry. Let's do up to 2010. Usually when you're filling this out, your period start and end date should just correspond to a year or a month. It helps doing it that way when you're looking at the financial statement extracts, which we'll come on to. But for the purposes of this, if you're trying to see what's happening over the full life cycle of a lease, which is what we'll do here, then yeah, it's entering a longer period is useful. For the accounting standard, I'll just select IFRS 16, but the inputs are going to be very, very much the same for the other standards. And then let's click a December year end. Okay, so that's our overall settings, and so company settings and report settings. The data in respect of each lease is entered onto an LAS sheet or lease accounting sheet. You can see here there's just a message here that does need to be in this format, so LAS dash and then a 4-digit number code, but 0000 will be ignored when the add-in runs. It's just going to skip over it. The reason we do that is just so that we advise to just keep this sheet here so that you can copy it. So each time you want to add a new lease to your portfolio in this workbook, it's easy to then just copy the LAS 0, because then you're starting with a blank slate. So let's start filling out LAS 1. What we need to do here is make sure that we've cleared all of these red cells. That's indicating invalid data, which is not going to be accepted by the lease accounting engine. So let's pick a subsidiary. we can indicate that it is not an intercompany lease, but that can be useful if you want to exclude certain leases from your reports, which are intercompany. Asset class, again, we need to make sure that we have some asset classes entered on the settings section. Commencement date, we would say 1st of the 1st, 2001, and then let's go for a 5-year lease. As I said, I've entered this to go up to 2010, so it's going to the report period is going to cover the whole life of that lease. Let's say that this has no purchase option, and we won't enter a practical expedient. Transition options we can ignore most of the time. It's useful though if you're transitioning away from another system to use lease accounts, or if you're adopting on-balance sheet accounting for the first time. So if you're switching over to IFRS, or in the case of IFRS 102, when on-balance sheet accounting comes into effect, this section can be useful, but we'll ignore it for now. So we need to enter in a lease classification. This isn't actually going to affect anything for IFRS 16 because everything is treated as a finance lease effectively. It does matter for US GAAP, but if you're only applying IFRS 16, then you don't really need to worry, just enter in one of the two. Let's put in a 5% discount rate. I'll just widen this column a little bit. So the end of the lease term and useful life is just being driven by what we've entered up here, but you can change that if you want to end the lease earlier, or if you're going to be depreciating over a different period. Okay, so we have entered everything we need to in terms of the inputs up here, but we still need to enter a payment profile. So let's do a fixed lease payment. So let's assume we have to pay £10,000 a year up front for those 5 years. Drag that down. You can see we don't have to enter anything in to start and end date. That's because that's not going to make a difference to how the costs are amortized to the P&L for leases. However, if we are going to enter some non-lease payments, so this would be things like service charges, then we do need to enter a start and end date so that we know when it needs to be released to the P&L. So let's add that. I'll just put this for the whole year. And let's assume £2,000 paid up front. So the value date there is determining when the cash is paid to the lessor. Okay, so once we've done all of that, we now got enough data in. There are other data points that we haven't filled out, but if they're not relevant to you, then you don't need to enter anything. So let's press calculate. And there is a reminder here that you will lose your undo history when we press the calculate button. So it is worth saving, and it's also recommended that you don't have multiple workbooks open at the same time, just in case there is an unexpected error. So when we hit continue, so that's processed very quickly. We've got 656 journal lines, so that's all the journals that would be relevant across the whole life of the lease for each month. And the journals will have been dropped onto this big table here, so we can see like there's our 5% discount rate. So it's hard to review something like that on a big table like that, which is why we have the pivot table reports to help you understand what's actually going on in your balance sheet and your P&L. So let's have a look at the balance by financial year. You can see there it does remind you, make sure that you've refreshed your pivot table reports. So you can just right click here and click refresh and it'll bring it in. Let's collapse this because we don't really want to look at this by months. So if we right click on the financial year, collapse entire field. Okay. So we can see here that in year one, and this is showing cumulative balances. This is what we mean by balance by financial year. Movement by financial year is just showing you the effect of the journal entries in each year, whereas the balance by financial year is showing the cumulative effect. Let me do collapse entire field on that. So the balance by financial year is useful because you can see like a subtotal of where the asset, like how the value of the asset and the liability over time, whereas this is showing you the journal entries that have gone in. So they will sum, overall they'll sum to zero over time. But we can see here we've got in the first year we've got this lease liability addition, which is offset by an addition to right of use assets, and then over time we are depreciating that asset until we get to zero, and then at the end of the lease we are terminating, so the cost and the depreciation comes out with no effect on the P&L at that from that journal, based on what we've entered. We can also see down here in the income statement section we've got our service charges going through. So again, that's the cumulative effect of our service charges. If we look on movement by financial year, we can see £2,000 being released to the P&L each year, and when we expand this into months, we can see that that is split as well by month. So yeah, we can get and this is the way the journals are structured. So each the lines within here will be based on a monthly release. Okay. Hopefully that covers a very, very basic example. It is useful to see some of the other features of lease accounts while we're here. One of those things is, for example, if you wanted to combine lease and non-lease components. So let's duplicate this and create another lease. Let's just call this LAS2. But this time I'm going to switch this to vehicles. I'm not going to change any of the data, but the key difference here is that in vehicles, we want to combine lease and non-lease components. So let's specifically look at LAS0002 when we run this. You can see there it's flagging that the report settings are now different to when we last ran the calculation. So let's rerun our calculation. Continue. Okay, so fewer journals this time, which I think you'd expect because we have fewer balance sheet entries. So let's have a look at our balance by financial year. Again, we must make sure that we refresh. So now what's happening is we have a bigger addition going through, and again we're looking at LAS0002. So the only difference between these two leases was that we changed the asset class, and changing the asset class is going to change the practical expedient election of combining the lease. So what you would see in both situations, you've both got in both situations you've got £60,000 being paid cumulatively over time, so £12,000 a year. But it ends up with a different way it goes into the P&L. So as before we had a service charge line within income statement, now it's all being wrapped up within finance and depreciation charges. And you can see there from the very beginning, you end up with a bigger lease liability and right of use asset, beginning right of use asset. As I said in the beginning, you probably wouldn't look at a whole period, multiple years like this. It is useful for review purposes though. If you're just looking at trying to get disclosures out, then looking at one single year makes more sense. So if we look at the final year, for example, which I think was 2005, and we calculate that, so this should now be bringing in both leases. What we'll see on our financial statement extracts, if we refresh this, it brings in these brought forward figures. So you can see this is our final year. So this is when we see the termination, where we're pulling out the cost and the accumulated depreciation. You can see as well, like the order might not always be what you want, but you're free to change this. So we want to get these brought forwards at the top. All you need to do is hover over the edge of the cell here until you get that cross with arrows on the end, and then you can just pull it up to where you want it to go. So here in this case, you've got a lease liability brought forward. There's a small interest charge just on that last day, being the 1st of the 1st, 2005. And then there's that payment going out. So, and you can see that this actually gives a nice view of the difference between vehicles and property, because we can see that we still have that service charge going through for property, but there was no service charge for vehicles because it's all being put through the depreciation and the interest charges. Okay, I think what else could we cover as a what it might be worth as well looking at is leases under IFRS 16 can be a little bit complicated depending on what your lease contract says. So you might have variable payments which vary by an index or rate. That's why we have all of these additional columns over here on the right. So what we've set up here in this column is a specific payment profile, which was calculated on that date. So that date happened to be the first, happened to be the commencement date. But you will have situations, or you may have situations, where you need to recalculate your lease based on either an updated payment profile or a modification to the lease or a change in expectations. Let's duplicate this, and we'll create 003, and I'll just show you how that would look. So let's suppose that we had, and let's change this back to property just to simplify it a little bit. If you did have a payment that varied according to an index, then we can add a variable lease payment. So this means that it's varying. It could be like, for example, CPI, RPI, or it might just be a market rent review. Let's add those in. So it would be the exact same initial setup, but let's say that let's say on the beginning of year 3, we have to uplift our payments based on CPI. So let's punch in 1st of the 1st, 2003, and you can see this is now triggering these red cells to make us, or this red highlighting to make sure that we enter all of these things. So we'll assume there's no change in operating, in lease classification. Discount rate, I believe, would not have to be reassessed as long as the lease term didn't change. So we can just, and you can see the lease, this gives you a helpful, do you need to revise the discount rate or not? What I will do is we'll assume that all of the service charges stay the same. You can see it grays out these payments because these have already been gone out. So anything we enter there is not going to affect our overall calculation. I'll do the same for here, but let's now say inflation is driving our increase, and let's say we've got to inflate this by 1.05. So we've agreed with the lessor that the payments are going to be 10,500 for the next 3 years. So once we have set that up, let's do calculate. In fact, let me cancel that for a second and let's make sure that we're just looking at this one single lease on its own. And yeah, we will look at the life of the lease as well. So covering those 5 years. Let's calculate. Okay, so now when we look at balance by financial year, let's refresh this. Again, let's right click on here and collapse that field so that we're not seeing it month by month. So it should be the exact same setup as before. However, we're now seeing this remeasurements line. So initially we're setting up with our present value of lease payments on the 1st of the 1st, 2001. But then on the 1st of the 1st, 2003, we're having to remeasure that. So we're going to credit our lease liability and debit our right of use asset. But you can see we still end up with 0 at the end of the lease, and the cash payments you can see now. In total, we're getting to that 61,500, which is going to be the total of that there, 61,500. Can be a little bit easier again. Let's collapse entire field. Can be a little bit easier to see what's going on when you're looking at movement by financial year, but remember that this doesn't give you the whole the running total and the balance of liability. You'd have to kind of add these up in order to understand the full balance, or use the balance by financial year. And I think I'll wrap it up there. So there are more examples on the website. If I go back here, you'll find more examples down here in lease accounting example workbooks. So in here, there are more complicated examples. So there's a change in lease term, so variable payments depending on an index that we've just discussed that, and also partial terminations is a bit of a complicated area. But Lease Accounts is here to make sure that these things are structured and easy to follow. But thank you for listening. Hopefully that was useful, and feel free to give Lease Accounts a try. We offer a 30-day trial, and after that it's just £29 a year per user. So please give us a try. Thank you.